Let's see. Let's see if that fits it. God damn it.
I'm gonna run a test.
Hey. I'm trying to like, so I downloaded some kind of
You
software.
can't even get your words.
Well, no, I downloaded a software to help my computer run smoother, but I think it's causing it to crash. But we'll see. Well, not the computer, but the game itself. I don't know. It's stupid. If it crashes one more time, I'm getting fuck off.
Delete your software.
That's what I did. I deleted it.
Oh, okay.
I had to uninstall it and restart the computer. So far, so good. Oh, man. I swear to God. Are y'all in here? I'm fucking done.
Hey guys, welcome to Crashes and Freezes can be very frustrating. Make sure the freezes don't occur while you're gaming. Updated with the latest patch. Before anything else, just make sure the game runs on the latest patch, because if not, then that's probably the reason why it freezes. To update the game, launch the Battle.net client. Click Games and then click Warzone. At the lower left portion of the screen, click the Update button if it's available, or resume the installation if it already started but stopped. Depending on your connection speed, it might take a few minutes to an hour for the update to be successfully installed. But after that, try running the game and see if it still stops responding or freezes. Second solution, update your graphics card driver. The next thing you have to do if the first solution fails, is to make sure that the driver of your graphics card is updated. Obsolete drivers have a tendency to mess up the game's performance. Here's an easy way to update the GPU driver. Click Start, and type File Explorer. Click Here's an easy way to update the GPU driver. Click Start, and type File Explorer. Click File Explorer to open a folder. On the left panel, look for this PC and then right-click on it. Click Manage. Under System Tools, click Device Manager. Expand Display Adapters, and right-click on your graphics card. Click Update Driver, and then click Search automatically for drivers. On your graphics card. Way to update the GPU driver. Click Start, and type File Explorer. Click File Explorer to open a folder. On the left panel, look for this PC and then right-click on it. Click Manage. Under System Tools, click Device Manager. Expand Display Adapters, and right-click on your Expand Display Adapters, and right-click on your graphics card. Click Update, File Explorer. Click File Explorer to open a folder. On the left panel, look for this PC and then right-click on it. Click Manage. Under System Tools, click Device Manager. Expand Display Adapters, and right-click on your graphics card. Click Update Driver, and then click Search automatically for drivers. You can also update your graphics card's driver by using the software that comes with it. Once all the drivers are updated, restart your computer before running the game again. Third solution, scan and repair Warzone files. After making sure that game and your graphics card driver are updated, what you have to do next is to troubleshoot the game itself. Let the Battle.net client scan Warzone's game files, as it will automatically rectify whatever issues it can find. Here's how you do it. Launch the Battle.net client. Click Games and then click Warzone. At the lower left corner of the window, click the gear icon next to the play button. Players who encounter crashes with a specific DirectX error, switching to DirectX 11th of May enable the game to run smoothly. Here's how. Launch the Battle.net client. Click Games and then click Warzone. At the lower left corner of the window, click the gear icon next to the play button. Select Game Settings. Put a check in a box next to additional command line arguments, and enter -D3D11 in the text field. Click Done to apply the changes. 3D11 in the text field. Put a check in a box next to additional command line arguments, and enter -D3D11 in the text field. Click Done to apply the changes. Restart the game to see how things go. If the problem persists, go ahead with the next fix. Fifth solution, reinstall the game. If all the previous solutions failed, it may take several corner of the window, click, don't forget to subscribe. We hope that this troubleshooting guide can help you one way or the other. Don't forget to subscribe to our channel and make sure you enable the notifications so that you'll be notified when we publish new videos. Thanks for watching.
What's going on, guys? Welcome back to the channel. Thank you so much for joining us today and for your support. Clay here with a huge AMC update. The AMC chart seems to show some major upside free stock where Edward Breachuk tweets, "Look at the OBV. We are ready to go to $47 to $52 soon. In my opinion, I was right. Hopefully we see this." AMC's on-balance volume has shown one thing in particular. The apes are not leaving, and if threshold just, we can be sure to rise. Your ballot, let your voice be heard. With the yearly shareholder meeting coming up in just a few weeks, we can be sure that the fate of AMC rests in our hands. The first quarter's earnings news that will likely have an AMC this. I know what it's like to hold significant losses in AMC. I first purchased the stock in February of 2021, right after it had surged to $20 per share. The stock had plummeted all the way down to $5 per share during that time, and I was facing significant losses. But all that changed when shares rose up to $72. Some of you got in during the climb. So, if you're facing big losses, I'm here to tell you there's still hope. Many people who held through the surge continue to hold the stock and are now facing minor losses or breaking even. Others are still profitable. The reason we held through the climb up to $72 per share is because the data showed us many shorts had yet to cover, and this is still the case today. When AMC surged to $72 per share, it had a short interest of only 20%. Today's short interest at the moment is 18.80%, and it was at 20% only days ago. So, is it possible we will begin to see some price run up very soon? It's definitely possible. All we need is for short sellers to close their positions. We can use the short interest percentage as a way to navigate how many short sellers have yet to close their positions. AMC dropped to 14% from its 20% short interest during its climb to $72 per share. And the higher the price, the more shares they'll be forced to cover. Remember, the stock was only at $14 when it began to skyrocket. So if you didn't know this, be sure to share this video with an ape, and if you did, well, share it anyway. Well, that's it for today. As always, please make sure to go down to the bottom of the page, tap that thumbs up button for me, and subscribe to the channel. While you're at it, go get yourself some free stock with Mumu. Link is in the description. Alright, thank you all for watching and supporting our channel. See you on the moon. What's going on, guys? Welcome back to the channel. Thank you so much for joining us today and for your support. Clay here with an AMC update. Melvin Capital continues a spectacular loss on AMC and GameStop as their investors get testy. Be sure to stick around, but before I get into it, click that thumbs up button and subscribe to the channel. While you're at it, go get yourself a free stock worth up to $350 by opening an account with Moomoo. No deposit required. Get yourself some free money. Guys, check this out. LJ Moynihan tweets, "Scoop, Melvin Capital investors furious as the fund reports returns are down 23.3% year to date and down 3.3% month to date. Melvin Capital has remained one of the most losing hedge funds of 2021 and 22 as Gabe Plotkin's embattled firm continues its losses, infuriating investors as they scramble to stay afloat. Upon the announcement that Melvin was going to close down at the end of June, have their investors eat their losses and hope they were willing to reinvest to get them back to par, Plotkin was immediately shredded, and for good reason. Melvin charged closed positions, hedge funds will continue to suffer. Shorts are losing money every day and hedge funds are bleeding. But the thing that we need is that we're engaged in illegal." What's up, Ape Nation?
We are back at it again here with another video to invest for tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for to smash that like button, tell me you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with MULN stock, slightly dipping lower and expectations. And if you guys want to know about these stocks early on in the pre-market, check out the you can now gain access to as well. The link is down rip area, and the rip areas are bright green and sometimes don't reach it, and they only reach up to dark green, right? And you could see those moves right there every single time. Sometimes it's weaker than others, sometimes it's stronger, and right now we're in the transition of going from white with red borders into dark green, trying to hold itself up even though it's under a bear indicator. It's going to take a lot more momentum for this to continue, and that's what we're going to talk about in today's video. And it's almost formed a triple bottom.
Yes, I was flying right there.
I think being in the state of Louisiana for the last 9 years, you start to understand how special a place this is. I think nationally, everyone understands that, but I think the closer you are to this program, the more that you truly come to understand what type of place that LSU is and LSU football is. Everything with quarterback starts with taking care of the football. Taking care of the football, making great decisions, and making sure that you are.
The automaton got buffed. Yes, they actually buffed the automaton, which was already a great AR to use. They buffed a 4 KD player that allows me to drop high kill rebirth games. I have a 29 kill trios game for you, and I've got a 15 kill solos game again where they are live comment.
We're gonna have some fun.
What's going on, apes? Welcome back to Finance News. Thank you so much for joining us today and for your support. Clay here with a massive AMC update. The apes continue to break a $100 million algorithm as the hedge funds scramble to fight against us. Be sure to stick around, but before I get into it, please make sure to click that thumbs up button and subscribe to the channel. I wanted to give a huge shout out to our sponsor FTX US. If you trade crypto, you need the FTX app. You may have heard of FTX from their partnerships with Tom Brady, Steph Curry, or the Miami Heat Stadium. FTX allows you to trade crypto and NFTs with zero fees. When you download the FTX app, using my link in the description, you can earn free crypto on every trade over $10. Check this out, guys. I got some free Solana. In other words, if you aren't using FTX, you are leaving money on the table. So go check them out. Guys, check this out. StonkTrader1 tweets, "I've studied trading algorithms for 8 years and I knew I'd seen this pattern before. It finally hit me. It's called a momentum ignition algorithm. It looks like short selling, but it's not. HFs are trying to induce panic selling, but it's not working." And we see this tweet from Jersey Mike, "Another day, same stuff. All good though. When we finally move, we will recoup the last 11 months of losses in a couple of days. Stay positive." Momentum ignition algorithms function by causing a sharp spike either buy or sell action, thereby enticing traders to follow suit. Following this trend, more traders will place buy orders above significant zones expecting a trend reversal, and short sellers will place stop losses in similar areas. These are effectively buy orders. In order for the algorithm to be most effective, it has to push price into these liquidity zones, triggering buys, and from there it can disengage. This has 3 effects on market participants. 1. The traders who jumped in at the tail end of the ignition have been significantly disadvantaged, as the price quickly dropped once the original igniter dropped out. 2. The accumulation strategies, often working on behalf of fund groups, have paid a disadvantaged price. And 3. Algos have been inappropriately tricked into trading, which affects the market-making buy and sell side firms. The result is the BART. Just picture the top of Bart Simpson's head here. This is a pure pump or a dump, followed by a return to the moon soon after. Hedgies using this manipulation tactic benefit by having their sell-buy orders filled and causing the market to open positions against the trend. And given what we've seen over the last 2 days by the hedge funds, they are using this tactic in spades. But there's just one problem. It isn't working and they are losing control. However, the question remains, when will the powers that be do something about this? This user tweets, "I can't get over how we have market that is 100% ran on algorithms and computers, fake volume and fake supply and demand. Price drops off, people not selling. Not one member of Congress has asked how that is possible. Tells you all you need to know, election time is coming." Ken Griffin trying to buy a Senate seat, Congress and members of the Federal Reserve continuing to trade on insider information, and regulators that sit by and do nothing. What do these 3 things have in common? They all benefit those with significantly more capital than us. We have continued to see the regulators shirk their duties when it comes to regulating the market as it is, only going after bad actors after things have blown up in their faces. We also need to take a look at the price action. We continually see more buy volume than sell volume, and there is no reason why this should be the case. When it comes down to it, the hedge funds have way too much control over the market, and if things go in Ken Griffin's favor in Pennsylvania, there is a chance that even more congressional legislation in his favor will be written and passed. The only thing that could potentially benefit us is volume. However, over the past 2 weeks, this has been historically low. Tinfoil Hatflex tweeted, "AMC traded more volume in the opening 5 minutes, the day of the halt at $34, than the past 12 trading days. What the F?" Comprehend this for a second. No, really, put this together. We can get 30+ million volume in 5 minutes, but we can't break 30 million in a day? As I've reported in the past, volume is our best friend. The Monday before the run to $34, we traded nearly half of the float of AMC. This led to a 40% green day, and the following morning, we traded nearly 60 million shares within the first hour of trading. In order to trigger the type of price action that is required to drive us upwards and trigger that FOMO buying, we need at least 95 million shares in a session. While we have seen this before, There is little incentive for the apes at this point, given that we continue to see the hedge funds manipulate the stock so heavily. The one thing I see changing things is the hedge funds once again losing control, and it sure looks like they are closer than ever. 3 days last week we saw their weaknesses either at the end of the trading day or throughout. Even the first 2 days of this week we saw midday pumps that show that they are already running out of liquidity relatively early on. The apes continue to hold all of the power, and there is no question in my mind that we are headed in the right direction quickly. So as we continue to make our way towards the endgame, remember what we are fighting for, because the apes are not leaving and the war is almost over. Well, that's it for this video. As always, please make sure to go down to the bottom of the page, tap that thumbs up button for me, and subscribe to the channel. While you're at it, check out FTX for some free crypto. Link is in the description. Alright, thank you all for watching and supporting our channel. See you on the moon. What's going on, apes? Welcome back to Finance News. Thank you so much for joining us today and for your support. Clay here with a wild AMC update. Elon Musk has given a piece of advice to the apes that boils down to hold the line. Be sure to stick around, but before I get into it, please make sure to click that thumbs up button and subscribe to the channel.
While you are doing that, go get yourself some free money by signing up for BlockFi. BlockFi is the best way to buy and store your crypto. With BlockFi, you can earn credit card rewards, trade crypto, take out loans, and safeguard your assets. But that's not all. If you use my link in the description, you can also get up to $250 in free Bitcoin for just signing up and making a deposit. Go get yourself some free money.
Guys, check this out. Elon Musk tweets, "Since I've been asked..."
You know, I gotta say, I am pretty genuinely impressed and fucking surprised at how well the Fed handled, inflation talk today, the rate hikes and all this different stuff. I watched the entirety of FOMC and I was thinking, what the heck? I don't think I've ever seen a Jerome Powell that seemed like he had a formulated plan. This is all like foreign to me. This is alien. This is like watching a UFO touchdown on planet Earth. I'm like, just genuinely surprised. Guys, welcome back to Trace Trades, where we freaking talk fast and don't skip class like that by Sam and I, Flash experts. So, they're going to say the grain of salt. Let's get into the video today, guys. We have to dive into FOMC. We're going to analyze the FOMC, the Fed talk, all this different stuff. We all kind of wanted to know which direction the market was going to go. We got that direction here today. Pretty crystal clear, smooth as butter, and I'm pretty genuinely happy with the way that this meeting was handled. Before we even dive into it, this is kind of the plan. I'm going to go over FOMC notes, kind of what my big takeaways were for the meeting. We're not necessarily out of the clear yet for the market, but I do think you are going to have short-term alleviation. I would expect that. I think that you're going to have a good bounce off of Jerome Powell coming out, sticking to a plan, executing the plan, and giving you less uncertainty. I mean, he gave you a lot of certainty with his talk and his plans moving forward. Then we're going to dive into AMC and what that means for AMC along with small mid-cap companies. Because this talk drastically changed things. It genuinely did. I think you're actually going to have a much better couple of weeks than you would have if Jay Powell came out and surprised the shit out of everybody, regarding what he was talking about. So, with that being said, FOMC happened today. Jerome Powell from the Fed, the chair of the Fed, came out and discussed rate hikes. They agreed to a 50 basis point hike, and 50 basis points is exactly what was expected. They were expected to raise rates by 50, not 0.05%. 0.5% was the expectation, and it was met. Now, I've talked about this before on my channel, but in case you do not know, uncertainty equals bearish conditions. Bearish and uncertainty equals bullish. These are pretty synonymous. I mean, genuinely, when you think of good news can be thought of as uncertainty. Good news can be thought of as an alleviation of uncertainty, which is a transition to certainty. Basically, what this is saying is the market over the previous couple of weeks has been pricing in a lot of uncertainty. You see this top out right here, and then from there, just a pretty smooth move to the downside, and it bottoms out at what appears to be just shy of $400. That bottom out was, to me, the price in of 50 basis points. Now, if they came out and they were to raise rates by 75 basis points, I think you would have seen the absolute opposite happen here today. I think you would have seen essentially the market reject, you know, this red path that I had drawn up right here. But thankfully, we don't have to deal with that. What you got to deal with was a 50 basis point hike. Now, since it was already priced in, you got that huge move to the downside, and you transition from uncertainty to certainty. Well, the market rallied, and it rallied phenomenally. You might think to yourself, well, 50 basis point hikes, this is bad for the economy. This is going to be bad for the market. But it's not like that. It's an uncertainty to certainty transition, which is inherently a good thing. You alleviated a lot of uncertainty, and quite frankly, I think that the broad market, whether I agree with it or not, was able to put a little more faith in Jerome Powell and their plan and what the Fed has to say and what the Fed would like to do in the future. So with that being said, confidence in the markets, certainty in the markets is going to equal upside. You're just going to have nice moves, nice rallies, and that's exactly what you got here. I want to make it painfully clear, though, that this does not alleviate the problems. There is still massive inflation problems. We have not combated inflation. We still printed off a lot of money. There's still insane amounts of leverage and margin in the markets. The housing market is still frightening, and we are still late. So long-term, mid-term, right, I don't think this necessarily gets rid of the problem at hand, but this does sort of, in a way, probably the best way that I can put it is it puts up like a shield, right? What you're doing is you see this fire that's burning back here, right? Housing market going absolutely nuts. Rates going to exponential heights that they haven't seen in ages. Inflation out of control. You've got insane margin problems. There's a liquidity problem within the market, right? And then you just basically put a shield in front of it. You're like, well, guess what? Doesn't exist. We can't see it. Out of sight, out of mind. And that is sort of giving us short-term protection here right now. So moving forward, what do I think is going to happen? Well, the Fed has hinted at 2 50 basis point hikes to come and then 25 basis point hikes thereafter. Now, if this goes to plan, if the Fed actually executes this in the next 3 or 4 FOMC meetings go like this, 50 basis point hike, 50 basis point hike, 25 basis point hike, or even better, like a 50, a 25, and a 25, or a 25, 25, 25, you're going to see insane rallies like we haven't seen. I mean, today, this is a monstrous move out of the SPY. It went from a low of $413 to what is now $428, and the high of the day is $429.50. It's a big move. We were up 3% on the day. That's monstrous. You would see another move like that to me. I think you genuinely would if and only if they stick to the plan. Bad news would mean if they deviate. If they deviate from the plan, well, what you're doing is sort of betraying investor confidence, and you would get that transition back to uncertainty. We go in this constant cycle in the market of uncertainty to certainty to uncertainty to certainty. Right now, we are starting to go here, right? And if they deviate from the plan, such as they have in the past, and they mention 75 basis point hikes or 100 point hikes, whatever, percentage hikes, you're going to go back to that certainty sort of monologue, so to speak, in the future. Good thing, the Fed is not actively considering a 75 basis point hike. He did mention that. Jerome Powell did mention that during the
softly in this his line softly. First pitch to her. His line softly into center field. The United States will take a lead, a 1-run lead as everybody goes 90 feet. Bases still loaded with 1 out.
It's now my responsibility to open doors for other young ladies, and they, on the field, have opened the doors for others. Thank you so much.
This is a big drive out to right, and that ball is gone. Daphne Jelinek goes out for a 3-run homer, and Canada has turned a 2-0 deficit into a lead in the 5th. You knew you didn't want to get to this part of the lineup with runners on base now in the late innings. Pitch on its way. Called strike 3 over the outside corner. Allison Schroeder comes into the game and strikes out Cobb to send us to the 7th. 1-1 pitch. Hit in the air. Left center field. That's going to get down to tie the game. Here comes Gortares. Underwood on her way to second. And that's the game-winning run in scoring position for the United States.
Infield drawn in, just about even with the bags or a step in front. Shot out to first. Underwood with the runner breaking from second's going to get the double play. What on earth is Emma Carr doing? And the inning is over. There is zero margin for error, and you're out there on the tightrope.
Yeah, but guys, these are pro ball players.
In the air.
Turning a double play, etc., is the way they roll. And you get
That's down and left, and it could bring home. Instead, a force out at the plate.
Another 1-2 pitch. That one's over the outside corner. Called strike 3. The pitch from the belt. Swung on and missed. Strike 3. One's over the outside corner. Called strike 3. The pitch from the belt. Swung on and missed. Strike.
Roll. And you get
That's down. And the inning is over. There is zero margin for error, and you're out there on the tightrope.
Yeah, but guys, these are pro ball players.
In the air.
Turning a double play, etc., is the way they roll. And you get
That's down and left.
These are pro ball players.
There is zero margin for error. There is zero margin for zero margin. There is zero. There is zero. There is zero margin for error, and you're out there on the tightrope.
Yeah, but guys, these are pro ball players.
In the air.
Turning a double play, etc., is the way they roll. And you get
That's down and left, and it could. And the inning is over. There is zero margin for error, and you're out there on the tightrope.
Yeah, but guys, these are pro ball players.
In the air.
Turning a double play, etc., is the way they roll. And you get
That's down and left, and it could. There is zero margin for error, and you're out there on the tightrope.
Yeah, but guys, these are pro ball players.
In the air.
Turning a double play, etc., is the way they roll. And you get
That's down and. There is zero margin for error,
yeah,
and you're out there on the tightrope.
Yeah, but guys, these are pro ball players.
In the air.
Turning a double play, etc., is the way they roll. And you get
That's down and. There is zero margin for error.
Yeah, but guys, these are pro ball players.
In the air.
Turning a double play, etc., is the way they roll. And you get
That's down and left, and it could bring home. Instead, a force out at the plate.
Another 1-2 pitch. That one's over the outside corner. Called strike 3. The pitch from the belt. Swung on and missed. Strike.
There is zero margin for error,
yeah,
and you're out there on the tightrope.
Yeah, but guys, these are pro ball players.
In the air.
Turning a double play, etc., is the way they roll. And you get
That's down and left. There is zero.
Another 1-2 pitch. That one's over the outside corner. Called strike 3. The pitch from the belt. Swung on and missed. Strike 3. Schroeder saved the fastball for the last out of the 9th inning. So we're going to the 10th.
Emerald sets up outside, 2-2. Back to the mound, up the middle and into center field. Canada's got the lead. Caitlin Ross is in to score. They'll hold Madison Willen at third. It's an RBI single. Daphne Jelena out of the 2-hole in the lineup. And this one shot out to second, and it's over Gialoni and down in right center. That's going to bring home at least 2. Over to third base is Valk. She'll post up a couple more home in the inning. A 5 spot for Canada and an 8-3 lead in the 10th. And the tying run bats, but this could do it. Bouncer to short, to second for 1, to first. 6-4-3, Canada bronze medal. Jelena to Willen to Lavallee. And a brief outburst from the United States comes up fruitless in the 10th.